Hi, I'm John Gagliano, Senior Director of Biopharm Catalyst.
Hello, I'm Sheff, known as Sheff Station, a 20-year vet in trading biotech stocks.
And this is Biotech Bulls and Breakthroughs. Just a reminder that we are not a registered investment advisory firm, and the views on this podcast are not intended to be financial advice. Invest at your own risk. Good morning, good afternoon, good evening, everyone, and welcome once again to another episode of Biotech Bulls and Breakthroughs. I'm John Gagliano, Senior Director of Biopharm Catalyst, and today is July 8th, 2025. We're super excited to be joined again by Sheff from Sheff Station. Sheff, welcome back. Thanks so much for joining us again and keeping up with all the podcasts that we're doing.
Absolutely, happy to be here. It's been a great time here, specifically over the past month or so, and so I'm excited to delve into that more.
Absolutely. And just for everyone watching or listening, just a reminder that you can see any of the other episodes that we've done on our website, www.biopharmcatalyst.com/podcast. And then also, please remember that Sheff has his Northwest Association for Blind Athletes, his mission. If you are interested in donating, we have a link on our website to donate to that. So please check that out and support him as well. We really, really appreciate it. But Sheff, let's get into some of the topics for today. The main thing that we're going to cover today is just kind of your process. We took a look at some of the comments on Spotify, on Apple Music, on YouTube, and there were a lot of folks who were just interested in understanding a little bit more about, how to trade biotech, specifically what it is that you're looking for, how you identify price targets, when to get in and when to get out. So we're going to get into that for a bulk of the conversation, as well as your watch list as usual. But it's been a crazy bit here in the biotech markets, and in a really good way, at least in the last month. So, do you want to comment a little bit on some of the things that have been exciting you in the last month? I know you've had there's a couple trades that we had talked about on previous podcasts that had gone really well for you. So, just wanted to recap some of those.
Absolutely, and it has gone well. And the reason that it has gone well is that we have less focus around what pharma's not doing and more what pharma's doing. And so when that occurs and you start to get positive cadence in the pharmaceutical market and the biotech market, you start to see individual money coming in. You start to see individual investor money coming in, speculative money that's more in tune with the kind of plays that I really believe have the greatest potential for growth, which are a lot of these small cap and mid cap plays. These plays that are oftentimes under 500 million, that have a clean cap structure in terms of shares and float. They have cash, they have partnerships, they have things that you look for a potential buyout, if you will. Two of the stocks that we had played that were extremely low float as well as low market cap companies. One was Artello Biosciences, which had done a reverse split. That ticker symbol is ARTL. And Artello, we were playing the first catalyst in June. They had a new drug that looked at fatty acid binding proteins, and they came out with data. Just basically, it was just general data, just saying that they found a new novel mechanism, and it's going to be utilized in the near future. And the stock went from $6 to $28.
Yeah.
We had that yesterday, where with the same stock that had pulled back from $28 to $10, and then they had news pre-market about a preclinical asset that they had, and the stock was $30 in the pre-market. So, these are the type of things that investors are looking for. And why did this stock go so high? Because of the demand for shares and the lack of shares available, which is, they have, once they did that reverse split, they had less than 1 million shares in the float, and probably about 1.6, 1.7 million shares outstanding. So stocks like that tend to do extremely well. We also had another stock in Netherton syndrome that did really well, Azitra, AZTR. We had talked about that at the 24-25 cent range. We knew they were going to have phase one data that was basically tolerability data. Um, it met that, and the stock was 40 cents pre-market. It's come down since then, but these are just the explosive potential of a lot of these small cap stocks. And Azitra is going to be a play that we talk about for the end of the year, because they're going to have full phase one data at the end of the year. And I believe it's going to be similar to the interim data that we saw in July, but it's just there's going to be a higher magnitude because they're going to use that to roll on to phase two clinical trial in Netherton syndrome. And again, it's a small cap company, but it's in a space where there's only two other companies in that space.
Hmm. Absolutely. And I think that brings up an important point, right? Is the competition, right? It's not just about what it is that they're focusing on. It's about who else is, is that space crowded, right? And I assume that that's something that you pay attention to fairly closely.
100%. And, like you talked about, with the changing dynamic in pharmaceutical companies, and a lot of, areas where you have significant competition. GLP-1, we're continuing to see, we only see a few key players in that market, but you see other players that are trying to engage with GLP-1 drugs, such as, one we'll talk about today, Vanny Medical.
Mm-hmm.
There's other, companies that are in unique spaces for obstructive chronic apnea. That we're going to talk about. And the apnea space is an extremely large space. You have, Nyxoah, which is expecting approval any day now. They moved away from a CPAP to a smaller device under the chin. Well, and then you have Icanex, which is moving from a device to a pill. And in sleep apnea. So we continue to see these evolutions in the medical space, and the key as an investor is getting to them before the rest of the market does. Pharmather. Last time we spoke, it was 15 cents.
Mm-hmm.
It's 30. It's up over 100%.
Yeah.
Um, and they're we're still waiting for their approval. So these companies, and they have, they're going to have ketamine for surgical pain. But again, like you talked about, what do I look for? I look for spaces that are untapped.
Yeah.
And there's a lot of untapped spaces there in the pharmaceutical and biotech market.
Absolutely. And just kind of taking a step back for, some users and some folks who are listening who are, let's say, brand new to the space, like just your process from start to finish, right? Where are you starting? Like, how are you even getting your initial ideas to then narrowing down your ideas? Like, where do you actually start from the pool of, thousands of publicly traded biotech companies?
Definitely. I think the key is with knowing what the time frame is for you to be holding on to a stock. So if you're brand new and we're in July, then you start saying, what are some July and August plays? More importantly, July, August, and September for the quarter that I can look at that have definitive timelines. Where if I'm not comfortable holding it, then I will buy into a potential catalyst, which we call that the run up. And
Yep.
what I'll do is I'll go to Biopharm Catalyst, and I think that's where you will look to see what. And of course, if you're on the mailing list, you get those as well. But you can go under July, and you can look under the nearest term catalyst. And some give specific dates, specifically if they're a PDUFA play, which gives you more of a definitive play. Like the next PDUFA will be, I believe, the 22nd of July. It's a stock I really like called Replimune. Um, that's one where you have a couple of weeks to play the catalyst move or the run up. Say it runs up, from $9 to $11, or it goes from $9 to $10. You've maximized your return, and you've minimized your risk because you haven't held through the catalyst. Um, and the more experience you have, and the opportunity you have to see what to look for in terms of, CMC manufacturing, Have they done a post-marketing study, or are they in the process? What is the FDA looking at? And you're looking at their history. You have the opportunity to see. But I start with the July catalysts within Biopharm Catalyst calendar, and I write them down. And some will give you definitive timelines where they'll say data in late July, or they'll say data in mid Q3. Well, those are catalysts that I'm not too comfortable, unless I know the space, about holding through. I will oftentimes lean more towards end of Q3 or end of a quarter, or a specific timeline where it says, we have a date, a PDUFA date.
Mm-hmm.
And PDUFAs, the other thing is, in the biotech space, it's the only industry where you have specific targeted dates that you can trade around. And so it really gives somewhat of an advantage to the small investor that oftentimes relies on earnings reports with bigger companies and other spaces and other industries versus a PDUFA date in the biotech industry, or more definitive timelines where they say we're going to present at a conference, which is another thing I will use. So if I am in July and I'm looking at Biopharm Catalyst, what I'll also do is I'll say what conferences are
Yeah.
available. And the Biopharm Catalyst has that tool now where an individual investor can go in and look and see if that company is going to be presenting their data at that conference. And then once you go into that conference, you can see specifically when your company is going to be presenting. So it does act like a BDUFA because it can give you a specific date, actionable date to trade around. So if they're presenting on Saturday and you're in it on Friday, you might get out at the end of Friday and take your 25% gains, as opposed to holding through Saturday, and then Monday comes and the presentation was negative and you're down 50%.
And I think that's something that really can't be overemphasized, because we do get that question often, right? Just we get it at Biopharm Catalyst. I'm sure you get it as well. Just in terms of holding through the catalyst, right? We say, and this idea of the biotech run up. I think that oftentimes the idea here, right, and correct me if I'm wrong, is to hit singles, doubles, triples, but not always go for the home run, right? You might be okay if you sit through the catalyst, but we really don't know. We don't have a crystal ball. We don't know whether the data is going to be positive or negative. And sometimes, even if the data is positive, the market and the investors still don't like it for whatever reason. They don't think that the drug can be sold. The competition is too high. They didn't like the safety label that the FDA provided. There could be a multitude of reasons that the stock actually does poorly, even if a drug did get approved. So I think the idea of the run up is extremely important, and trying to capture X percentage of that upside without going for the home run. And if you do that consistently, then you're going to have a much higher likelihood of doing better over time, rather than just looking at the catalyst and being like, hey, I'm hoping that the data is going to be good and the market is going to react positive to it. But either way, those catalyst dates are extremely important, because it allows you to know how long to trade the run up for and when to get out. So I think that that's an extremely important point. And I guess one other question on that, Sheff, is, so, do you typically hold your stocks like right up, like let's say it's a PDUFA, will you hold it right up until the day before? Do you have any, is there any rhyme or reason to like how long beforehand you get out?
That's a great point. So, first thing I wanted to touch on before I answered your question was just go back to a point that you made, which I thought was really poignant and key for this discussion. And that's we had a stock that just had an approval a few days ago called CalVista, KALV. And CalVista was important because the stock on approval went to a little over 14 and it was at 11. But that stock did not have a run up. And that was one of the few that I did not hold. The reason I chose not to hold it, and obviously I missed out on the gains when it got approved, was because there was an article published by Adam Feuerstein that spoke about the fact that the new chief of cyber, or CBER, Center for Biologic Research, Excellence in Research, he, Macquarie, he had looked at prior denying approval for the drug. The drug obviously went on to get approved, and that was something that had to be cleared up because he didn't believe that the FDA had the manpower and to review and approve in an adequate time. So he had looked at potentially doing a complete response, giving it a complete response. Well, from that, the stock went negative, went under 11, and then it barely came back to hold its gains at 1160. So I saw that as that was definitely a high risk stock because even though they went through all the proper channels, there was noise into that stock that kept investors from really getting in and feeling confident about it, even though it was in a high need, unmet need area where I would have thought, yeah, this is going to get approved based on the history they've done. So
Yeah.
that was a rare instance where I would not hold through. Where I do hold through is companies that have had a prior history of a complete response. So if they've gone to bat twice and they've gotten rejected twice, then the likelihood of them being rejected for a third time is rare, and it's
Mm.
pretty much unheard of. There's only one company that has ever that I know of that has been rejected three times, and it was the ticker is not Disco anymore, but it was DSCO. And Mankind, MNKD, was also another stock that had had a few rejections where they had their CEO, Alfred Mann, and they, had issues in the past. But most of the time, when you've crossed the hurdle twice, then you'll typically get approved. And usually I will hold it if I know that they have not had any questions from the FDA with regard to safety and efficacy and their clinical studies, and I know about manufacturing. So if a company has gone through all the processes, but they haven't assured investors that their manufacturing facility has been inspected and they haven't
Yeah.
put that in a PR, I will not invest because almost 50% of the complete response letters that go out are not due to the fact that companies haven't, you know, um, done adequate studies or had significant results. Half of the time, there's a complete response letter from CMC, the chemistry and manufacturing components that don't allow them to get approved because they can't. They haven't been approved to manufacture the drug at their facility because it's failed inspection. So a lot of investors don't know that, but it's very important. And so half of the time I'll invest and hold through a PDUFA. Half the time I won't. Let me give an example, another example, which I think is really, really key. There's FDA websites. I don't have the site with me now, but that allow you to see when your company that you've invested in has had an inspection.
Mm.
So look at REPL, Replimune. Replimune has done everything. They have a breakthrough designation, REPL is the ticker. They have had adequate phase 3 studies. It's in a high unmet need. They have orphan drug designation. So what's the one thing that we didn't know about? Whether they've passed their inspection. So this FDA website that I went to had that they had their inspection about a month and a half ago, and that inspection came back green. Which, when it comes back green, it means no action required. If it comes back yellow, there's still something that has to happen for it to get approved. And if it comes back red via the FDA, it was denied. And
Hmm.
so you're able to see that with Unicisive ticker symbol UNCY. Just recently,
Yeah, that was another one that came up recently. Yeah.
yes, we had talked about that initially. We had sold on the pop when it went to $9, or a dollar before it did its reverse split. And then I hadn't re-entered it again because they had an issue with their manufacturing
Mm.
facility, and the company reassured me that there was 3 months to still have their facility re-inspected. But knowing the FDA, it takes a long time for the FDA to set up these inspections. It's usually anywhere from 6 months to a year. So if a company fails within 6 months, FDA won't see them again until after that because they're just too backed up. So a lot of times they'll give a complete response. So I was sharing with investors that even though I think Unicisive is a solid company, and on the back half of the year they will get approved because it was a simple manufacturing issue where they're going to change their manufacturer. They ended up getting a complete response. So back to Replimune, that PDUFA is on the 22nd, and they've checked off all the boxes, REPL, and so that's one that I will be holding through. And it's 9:30 right now, and I think it's
Hmm.
going to go to $11 or $12, and then on approval it'll go to 14. So
And
I think that one's going to do really well.
that's a really great point, Chef, and I'm glad that you brought that up. Just in terms of taking a look at doing some extra due diligence and taking a look at some outside factors and some outside things, aside from just taking a look at whether the company has a drug that is a rare disease drug, right? Like, I mean, that's great, but sometimes you have to take a little bit of a further look under the hood to really see what's going on and see, take a look at some of the other variables that could be impacting the, what happens with the stock price. So, I mean, I know you mentioned you mentioned that FDA website, which I think is interesting. I think you mentioned that you take a look at some prior press releases. You also mentioned Adam Fierstein, who's a great follow. I mean, are there any other big sources that you're kind of using on a regular basis, even outside of Biopharm Catalyst? I mean, I just want to make sure you are focused.
No, I mean what I'm really using is the historical perspective of the company in terms of going to the FDA, and so
Mhm.
I find that with press releases, and I find that oftentimes talking to the IR folks and watching prior videos.
Yeah,
Um, a lot of times, individual investors they'll hear about a hot tip but they don't do their due diligence
yeah,
and see what that tip. How what's the inference, what's the read from that tip. And I think it's really important that individual investors know that there's two sides to every story, so you just have to make sure, specifically when it's data driven, because there's either PDUFA where there's a yes or a no, either you get approved or you don't get approved, and then there's clinical data, as you spoke to, that sometimes it can be interpreted the wrong way. So will I ever hold through clinical study data? Yeah, I will, but it won't be phase three. The reason being is there's too much expectation with the phase three because the phase three study is the final step before you get FDA approval. So with any FDA phase three study, oftentimes it's statistical significance in terms of efficacy. It's 0.00001. So there's not a lot of flexibility in terms of whether you failed or you haven't failed. And if you miss that parameter, the market will punish you. You could be zero point zero zero 0.006 as a point, or zero point zero 0.06 as a point, as opposed to zero point zero 0.05, and fall out of statistical significance, and your stock or the company that you've invested in could drop 60 or 70% based off of that. What I will tend to do, and you'll see as we go through the watch list as well, is I tend to stay away from clinical endpoints that deal with efficacy, specifically in a phase three, where I will tend to go towards pharmacokinetic studies, studies where there's flexibility, studies where they're talking about a new compound, and and it's general knowledge. Say preclinical, we saw preclinical data in mice that showed that it had 100% complete response rate. Well, that is preclinical and it is mice, but investors don't see that. They see 100% complete response rate. So um, preclinical data, rarely negative. Pharmacokinetic data, rarely negative. Safety and tolerability data, rarely negative, unless the stock, or excuse me, unless the drug from the company is just a toxic drug. Most of the time they know that in phase one and phase two,
yeah.
which is why I brought up Artello, because Artello is still in the phase two phase. The other thing that I think is really important is open label versus
Mm,
non-open label. Open label, a company can see what their drug is doing versus the active comparator arm. So they know if their drug is working, and they're very enthusiastic on their investor presentations that we can't wait until our phase
right.
two data. We are thrilled because they know what to expect. You don't see that in phase three. It's like we're hoping that we meet statistical significance. We're in a very tough space in the Alzheimer's space, so we don't know what we're going to have. And that's why, again, even looking in the Alzheimer's space, and you and I have discussed this, John, that we saw the company that recently got knocked down after Martin Shkreli and Adam Feuerstein had talked about, I think it's Imuron, IMRN. um, they gave investors a chance to get out. They had data on Monday, but did a press release on Friday saying they were gonna have data on Monday. And I don't think that's it. I'm sorry, I brought up the wrong stock. It's not Imuron. I think it's um, Immunon. Oh, I can't remember what that was. It's I think it's IMMN. Um, but it's an all it should be. I think it's a stock that it's probably about $2 or $3
Oh
right
yeah,
now.
yeah. Is that one it?
What price? What's the price on that? I don't see it.
It's 855.
No, that's not it.
Okay, that's okay.
Um, yeah, but the stock, was at $14 or $15. So it popped on Friday when they said they were going to release news on Monday, and Adam Feuerstein said that's a plot. They know they have bad data, and they're doing it on purpose because
Mm,
they're gonna sell into it, and they did. They had horrible data on Monday. I wouldn't say horrible, but it was data that the market did not that they didn't like, and it dropped down to $4 a share. So it was unfortunate, but again, it was it's high end data. It's very there's a lot of eyeballs on it, and there's no room for error.
yeah,
So
yeah.
um, that's the key.
Very cool. Well, Chef, that was awesome. Just in terms of everything about your process, I think there was quite a lot to unpack there, and I think I'm sure everyone learned quite a bit. So really appreciate you walking us through that. Just want to move on now, just to kind of what you're thinking for this month and the next couple months, for the rest of the quarter, in terms of your watch list. So if you want to walk through some of your picks and kind of what you're thinking for the next couple months.
Absolutely. So one of the top ones we've been waiting on. The CEO has talked about the fact that they're just waiting on the final inspection. Is ticker symbol NYXH. It's Nyxoah. And they've already received an approvable letter from the FDA in April, which basically states that if they finish the last component, which is, having the inspection, the inspection that they're waiting on, they already had an inspection of their facility from the FDA. Now, the medical device side is of the FDA is asking them to do the same inspection. So they're expecting it to pass. It was supposed to get the CEO was expecting FDA clearance by the end of June, and so we're into July now. So it's imminent. The 510K, it's a sleep apnea device that should get through the finish line. I think if it gets approved, that'll easily be over $10. The float is really small, with the company, and I think like right now the float is 13 million. So I think that one's going to do really well. And then the next one on the list is we talked about Replimune. Their PDUFA is July 22nd. You know, they've dotted the I's and crossed the T's there, and so I like Repligen, and I do want to point out something that I made an error on. As far as the facility, I know Replimune has done well for the facility, but the one that I meant to talk about that came up into my head was PGen, PGEN, and that one is going to get, yes, Precigen.
Hmm.
I read about them. It's their facility has already been approved, and that's an August date. So it's an August 27th date. I know I had originally said the 29th, I thought, but it was the 27th. But I like Precigen and I like Replimune. I own a small position in Replimune. I have a larger position in Nyxoah that I just mentioned. The next one is Immuron, IMRN. And the ticker is close to the one for the Alzheimer's. That's why I said no, it's not. It wasn't that this one because this is the one that I own and I like. Um, they have a they have an IND submission that they're going to put forth in August. So that's the first catalyst. They have data in October, which is phase 2 data for Travelon, which is for traveler's diarrhea. There's nothing for that. It'd be a brand new indication in a growing space. Um, the the float on the stock is extremely low. The company has cash. They have very small debt. But I like the company. I like that they have 3 catalysts within a 2-month period of time with the IND submission, preclinical data, both in August, and then data in October. I think that's a definitely a catalyst run-up type play. And I feel that that's one of those plays that I've spoken about with, when I was talking to John just a second ago when we were talking about the risk reward. I think there's a high reward and a lower risk there. Then that's Immuron. So the one that I've been in for a long time and it's a good sized position for me is IceCure Medical. That's ticker symbol ICCM. We know that in November of 2024, they had an approval. They convened a panel, an FDA panel, and the panel was in favor 9-4, I believe, that they should approve um, their breast cancer therapy called ProSense, non-invasive therapy. And since then, the FDA came back about a month and a half ago and said, we're fine with everything, but what we need from you, even though we approved this in the FDA panel back in November, we need a post-marketing study. Once our FDA device panel has a chance to look at it and everything's good, we will approve you right there. So what they did about a week and a half ago is they did a rights offering, but it was only for big institutional investors into the company. And then they reached out to individual investors and they gave them, $1 for each share, and then they gave them a free warrant. So that was at $1. And obviously over the past few days, the stock has really moved. So it's up 15% from that dollar mark where it was last week, ending Friday. And so ICCM, I'm expecting 510K approval of ProSense in the third quarter. It's really a risk off trade. It's the return is there. They've already been vetted by the FDA. I really like the company a lot. That's one of my bigger plays. So I like that. Then there's ticker symbol VANI, which is Vanny. Um, they've got the Liberate One data read in July, and they're in the GLP-1 space, so it's using their device, with the GLP-1 drug and reducing weight, and so it's kind of a phase 1, phase 2 data read. I've heard presentations from the CEO and the CMO, and they feel very confident that they're going to meet their goals of efficacy, but mainly the tolerability and safety is the primary endpoint. They're expecting efficacy endpoints, but they haven't made clear on what those are. And when asked what a successful study looks like to them, they really focused on safety, tolerability, and there's a specific scale that they look to in that space that's really important before they go on to their phase 3 clinical studies where efficacy is going to play a bigger part, even though in prior studies they've shown that they have efficacy. But I think what they're looking at is if safety and tolerability are where they need to be, and then they show efficacy, even though it's not a primary endpoint for that study, investors are going to look at that and really, the stock's really going to catapult a lot higher. Vanny is one that I like, and I own a position in that. The next one I really like, it's Icanex, ticker symbol IXHL, and they basically have a study, the U.S. portion of their phase 2 study in sleep apnea that is I'm expecting that data, that top line data, anytime in July, probably toward the back half of July, because they, in the 25th, the 26th of June, they stated that they had reached full enrollment and that they locked it, the data, and that they were just going to be sifting through the data to see, to pull it together so they can release it to shareholders. So let me just share, and this is where again risk reward comes into play. They're very confident that their data is going to read out positive. The reason being is because they know that within this space, they've these drugs that they're using. Are been designed to act synergistically. This IHL42X, it targets two different pathways that are associated with sleep apnea, hypoxia and hypercapnia, that characterize OSA. And so, in a prior Australian study, phase 2 clinical trial, which the study that we're waiting on is a U.S. phase 2 clinical trial, but in the Australian one, they used IHL42X and it was shown to reduce the hypopnea index, the AHI, and all the dosage strengths, with the lowest dose reducing the AHI by an average of 51% relative to baseline. So, and that's in all doses. So they're thinking that because they have prior study in Australia, and it's the same study that they have in the U.S. Well, it's actually not the same; it's pretty close. The study in the U.S. is, phase 2 study. It evaluates individuals who have obstructive sleep apnea who are either non-compliant, intolerant, or naive to positive airway pressure devices like a CPAP. So, but it's still pretty much a similar study, but because the results were so impressive in Australia, that they've already assembled this sleep apnea board where they've established and brought on some of the most prominent names in the sleep apnea space, from Harvard, from MIT, from like all kinds of different realms. So they've taken those steps. That date is going to be in the back half of July. The other thing that they've done, and I mentioned this in a prior podcast, but it speaks volumes for what they're doing, is they've canceled a number of warrants. They took out a they took out $15 million of stock, and they paid down these Series A warrants, eliminating up to 350 million shares from potential dilution ahead of these phase 2 top line results. Then the following week, they executed a strategic cancellation of 50% of their Series A warrants, which reduced dilution. Basically, they're putting their money where their mouth is, and they're saying, "Hey, we're going to clean up." And they did clean up their share cap structure, so that when the data is released in July, investors and shareholders are rewarded significantly. And again, it's in a space where no one else is participating. There is no other pill that can reduce obstructive sleep apnea. Just all we have is devices. Whether it's
Yep.
a CPAP or a one under the chin, which we're waiting on for Nyxoah, or a pill. So that's going to be in July. So I really like that one, and I like what the company has done to move that forward. So that's IXHL. The one that I really like as well, that I own a lot of, and I've been in it for over a year, is Pharmathere. I've talked about that one. Ticker symbol PHRRF. That was 15 cents a few weeks ago, and it's up over 100% in anticipation of a PDUFA date of August 9th,
Yep.
where they're looking to get approved for ketamine for surgical pain. Once they get approved for ketamine, it's going to lock the other orphan drug designations they have in 5 different spaces. Their next one is Rett syndrome, and they have some other, mood disorder areas where ketamine is going to be used. But it's really important because this company is doing things the right way. Now, why I like the company has been hit over the head from the FDA 3 times. So they've had 3 complete response letters. The recent news that they had was June 4th, where the FDA came back and said, "Hey, wait, we know this is your, we know," and it was actually in May, where they said, "Hey, we're not going to be able to make that June 4th date because we need an extension. So extension is much better than a complete response. Obviously, complete response resets the whole table, where an extension just says, hey, we feel comfortable. We've already got on you 3 times about what you needed. And it's a minor adjustment. It's actually, they're in labeling discussions, so it's a labeling issue. And the FDA is just backed up. So even though the new PDUFA date, or GDUFA, the Generic Drug User Free Act, it is August 9th. And there's a possibility that it could get approved before August 9th, and they don't need to use up the whole timeline. But in any case, if they do, they've already had 2 significant complete responses. One was a minor response, and then this latest one, of course, was an extension. And so I think they're going to cross the finish line. They're going to open up this ketamine space, and we talk about psychedelics, and the new wave for medicines. This is where that space is going. So, and of course, after they get approved, their next opportunity is to get uplisted to the NASDAQ, which I think they'll do. And the Fabio Cianelli is a CEO who's been very open with investors, and I think that's why investors have continued to stick with him, because he's very upfront about what the company's doing. So that's Pharmathere. The next one is Windtree, and Windtree. I'd been talking about that was 32 cents about a week and a half ago, and I had gotten in it for the phase 2 data that they're going to have for cardiogenic shock. It's actually the seismic C study. Their A study and their B study both had outstanding results. The C study, seismic C, is in sicker patients, but they're still expecting the same results, for that. And it's basically an add-on study that they need to get phase 3 rolling. So that's why I was in it. Well, about a week and a half ago, they came out with data saying that they had just gotten approved for a new patent that they had applied for. And lo and behold, the stock went from 30 cents to $1.07. And then it pulled back to, 80 cents. This morning it pulled back to, in the 60s. And not sure what it closed at, but I like that stock. I think it's their data's in July. It's the seismic C study. Their shares outstanding is about 5 million. They've got about 3 million in the float. So it's a stock that if they have good data, it's going to run well over $1. And I believe they're going to have good data. The CEO has been pretty transparent about what they've seen in prior studies, and that's a space. The 2 prior studies did so well that this seismic C study, which is smaller, it just shows an expanded patient population, an older patient population. I believe they're going to have the same results in that study as well that they've had in the prior 2. So that's Windtree. Intelligent Biosystems, that's another 510K. They submitted their 510K in December of 2024. And this is a extensive, it's a fingerprinting, so now, before people have to do blood tests or saliva tests, for identification. Theirs is just a simple finger test, where you put it in the machine, and, based on who you are, just it's extremely accurate. And they have had one request from the FDA for information. That was in March, and so it stopped their 90-day period where the FDA stops the clock until the questions are answered. They answered the questions in May, and so it started the clock again. And so they're expecting approval in the July-August timeframe, based on this clock that they have with the FDA. And so, it's another company that has an extremely small float, 6 million shares in the float, probably about 10 million shares outstanding. They don't use a lot of cash. They're in a space, that they're the only ones in that area, so it would be a revolutionary technology. They've established a number of clients already, even though, because they're approved in Europe, they're approved in everywhere else but the United States. So, but this is, of course, the biggest market, so that's what they're waiting on. So I like INBS. Again, I like where they're at. I think they're going to do extremely well, and the company has, the stock has held tight to where it is at about 170. The next one is Revolution. Um, let's see, Revelation Bio, ticker symbol REVB. Now, I like them. They were an 83 cents, like an 80 cents, and they just did a 3-for-1 stock split. The reason being, and the reason that a lot of these smaller companies do this, is to adhere with the NASDAQ guidelines for being over a dollar. And they knew their data wasn't going to come out until July. And so they needed to stay in compliance. And so they did a 3-for-1. After that 3-for-1, they were $2.35. They have about 500,000 shares in the float. They have data coming soon. It's prime data. And, basically they expect to see top line data from this phase 1B. Again, phase 1B, what is that? Tolerability, safety, right? If they see efficacy, it's a bonus, especially in terms of the stock price, but it's tolerability, safety, and it's in. So they're expecting to show safety, tolerability, and demonstration of protection from pro-inflammatory agents, and that's going to be in July. And so in March, they had already announced that this Gemini procedure that they used primes inflammatory response in human peripheral um, blood cells, and so that helps particularly in patients with chronic kidney disease, which is where that's the space that they're looking for to seeing some data in July. And so I think anything they put out in terms of positive data is going to really help the stock move, because first of all, there aren't a lot of shares out there. Flippers, traders, market makers like to, especially in these low float stocks, they like to crank the volume. And when they do, you just have fewer shares and the stock price goes higher instantly. And just I'll say one more thing for this. We talk about risk reward. We look at the studies. Is it open label or is it double blind? This
Mhm.
one is a phase 1B. It's a randomized, it's placebo control, but it's a single blind study. So it's an ascending dose study in chronic kidney disease patients. There's only 8 patients. They follow them for 7 days. What are the readouts? The readouts are safety, tolerability, PK, and activity biomarkers, and a lot of those are just subjective. And a lot of times when the company says, "Hey, we had great data that showed, that this Gemini works well in chronic kidney disease," it's a success. There's no one saying what were the hard clinical endpoints in terms of efficacy, because that's not what the study was demonstrated to show. So that's another situation that I look at where I say, what are the investors? How are the investors going to respond? How's Wall Street going to respond?
Yeah.
Well, they're going to say that's impressive for a phase 1B study, but let's see what happens with phase 3. Well, as an investor, we don't care. We just want to see our stock move, go higher, and have the opportunity to get a good position and make some money on it. So that data's in chronic kidney disease in July. Um, the next one I've talked about before. Again, we've seen over the last month the stock go from $6 to $30 twice, and that's Artello Biosciences. They have data in August. It's their phase 2 data. It's the CARES study, and that data is in anorexia and cachexia in patients that have cancer. So we know that there's nothing for patients that have chemo, and then they take this chemo, it makes them sick. Their food tastes like alkaline, tastes like metal. So what happens? They don't eat. So then they develop anorexia. And how do you what's the challenge for that? Or what? How do you take care of that? Well, there's no drug for that. So they're going into space again. What we talk about, that's a rare space where there's nothing for that.
Yeah.
But I also, right? But what I also think is good though is that the company has delivered 2 times in a row. And I think everyone knows that, because when the other day when they announced that data and it went to 30 and then it pulled back and it closed at 12, since then I don't know what it's at right now. I think it might be 16 or 17. Um,
Yeah, I've read about 16.
yeah, right about 16. So the stock is going up in anticipation of this CARES data, because they're a very investor friendly stock. I mean, they put news out, the stock moves.
Yeah.
They haven't disappointed yet. So that data is in early August. This study is or this next one is CGTX. I like CGTX. There's three reasons why, and this is what we talked about, John. Um, the definitive nature of the catalyst.
Hmm.
So first one is July 9th, my daughter's birthday. That is going to be, they're going to have an end of phase two with the FDA on their SHINE study. The SHINE study is the phase two that just reported and showed good results. So they're going to talk about that. Um, and then what they did on from their July 25th or July 20, or excuse me, their June 25th or June 26th press release was they also said that they are going to or they filed an IND. So we talk about that. An IND, the FDA has to get back to you usually within 30 days. It's usually on the 30th day. So they filed an IND on July 20 or on June 25th. That IND will be accepted on July 25th. So that's a 30-day window. I see that it's a new type of PDUFA, but it's safer. And they, depending on what the share structure is for the company, is it going to really move or is it not? Um, this share structure is not really tiny, but it's not massive. They have about 60 million shares outstanding, about 50 million shares in the float. But coming off the fact that they have the July 9th meeting and a phase two meeting with the FDA, and then they have the acceptance of the IND on July 25th, it poses two back-to-back catalysts, which I think is great.
Yeah, absolutely.
Right? The third catalyst is that they also, when they filed the IND submission, they filed breakthrough designation in the Shimmer study. Now, the SHINE study is for Alzheimer's. The Shimmer study is for Lewy body dementia, which there's nothing for Lewy body dementia. Um, you know, we're finding that more people have Lewy body dementia. Um, you know, Bruce Willis has Lewy body
Mhm.
dementia right now. There's a few other actors that have it as well, but there's no treatment for Lewy body. So they applied for breakthrough designation based on the Shimmer study. And, that the FDA has to comply and respond within 60 days of submission. So if it was June 25th, now it's August 25th. So we've got 3 dates. We've got July 9th with the FDA meeting with the FDA, July 25th for the IND acceptance, and then we have August 25th for breakthrough designation. All three of those can significantly propel the stock. But if you're a momentum investor and you're trading for the run up, like you spoke about, John, as an opportunity for those that maybe don't want to hold through, there's your opportunity.
Yeah, definitely.
And for me, it's you had asked, you'd say, hey, what do you look at? Well, for me, and you had spoke about the singles and the doubles and the triples. I completely agree with you. Sometimes, I mean, pigs get slaughtered in investing, and sometimes I think it's taking that initial 20% or your initial investment off the table. So
Yeah,
for me, it's either 20% or it's my initial investment. So I'm playing on house money.
yeah.
So if what I think to happen is going to come to fruition and it does happen, then great. And if it doesn't, then then that's fine as well.
Then you've hedged. Yeah, exactly.
Yeah, then you're hedged.
Yeah,
Precigen, August 27th, in a rare condition. Again, as I mentioned, they've already had their inspection of their facility and they passed it with flying colors. That closed at $1.70 today. That had been around a $1.53, $1.54 the past 2 days, and so it's gone up about 10%. But that's if someone said, "Hey, these other catalysts are too close. I'd like a catalyst that's further away," like 45 days. This is right there. This is right in your sweet spot. It's a $1.70. It's in a rare condition. Um, and that one's going to get approved. That one's definitely going to get approved, in my opinion. And then I've got three more. And PMVP, they have inter-analysis data in July. And the CEO is very confident that they're going to get approved. Or not that they're going to get approved, that the data is going to be good.
Mhm.
It's basically it's early stage data, and there's it's data it's interim analysis where they're following 50 patients, of which 40% are in the ovarian cancer cohort. But the thing that is interesting about this is they're focusing on a gene, one specific gene that can alter, how a patient tolerates, medicine, and it's the P53 gene. So, it's harnessing the power to treat P53 to treat cancer. So that I think that data is going to be positive. They've got 160 million in cash, which is significant. Yeah, I like that one. The final two are Kappa, KAPA, and Kappa has phase 2 interim data in prostate cancer. Um, and they've had data earlier that de-risk this data coming out. I like any small company that has that has funding from the NIH. I like, because the NIH doesn't want to waste that money from that grant. They got a big grant from the NIH to do this study that's supposed to help patients tolerate prostate cancer medications better and with their medication. And so it's the other thing is it's open label, so the company knows who's getting what, and it's also a small cap or small float company, 3 million shares. So I think that one can go bonkers on positive data. And then the last one is GRI Pharma. They've got biomarker data in IPF. Let's see. So they've got data in IPF here, idiopathic pulmonary fibrosis. It's biomarker data. Hey, my favorite kind of data.
Yeah.
Yeah. They've got biomarker data that, and in the past they've reported positive biomarker data trending toward antifibrotic effect of their GRI 0621. And this is just an enhanced study in idiopathic pulmonary fibrosis, which I'm expecting it's going to show the same thing. They've got 2 million shares in the float. This is another company like Kappa that can just absolutely go bonkers. There's not a lot of shares to be owned. So, the company doesn't have a strong of a cash position. I think they've got, between 5 and 10 million shares, but they don't have debt. And I like this company. I think they're going to perform well. And that's another one that's expecting data in July. Most of these plays, most of these plays are July, August plays. Very heavy in July. I mean, July is typically one of the busiest months for data for small cap, mid cap bios, and I think this point holds true. Obviously, in the beginning of the year with ASCO, and at the end of the year with San
Yeah.
Antonio Breast Cancer Conference and ASH, that's the big boys, the big players in the pharmaceutical. But when we're talking small cap biotech, it's this summer. The summer plays, the blazing plays right now. So
That's great, Jeff. Thank you so much for walking us through all of that, and as usual, learned a ton, and I'm sure our audience did as well. And as always, just really appreciate the partnership on this, and having you on. The discussions are always great, and we're gonna continue them. So thank you so much.
no, thank you, John. I just want to say one last quick thing that you had brought up that I think is really important.
Yep.
Not just that, it's the other thing with these small caps, as I mentioned before, is the cash, the partnerships, other things that these companies have that is going to help them with support. If I like the smaller cap, mid cap that have support from other companies, that's really important. I forgot to mention that, but thank you so much. I love the partnership, and I appreciate the time today.
Yeah, absolutely. And that's again, that's a great point, is just, how these companies are differentiating themselves aside from just the assets that they have in the way of drugs. How are they positioning themselves in the market? What are their financials like? To your point, the cash, how much cash runway do they have? And that's all stuff that we track on Biopharm Catalyst in our cash database as well. So Yeah, really appreciate that point. And for everyone listening via Spotify or Apple Music or on YouTube, thanks so much for tuning into Biotech Bulls and Breakthroughs. We will be back at the end of July. We're going to be having one of the senior editors from Biospace on to have a good conversation, and then we'll be back with Sheff sometime in early August to catch up with him again on his watch list. So again, thanks so much, guys. Really appreciate the time, and thanks again, Sheff.
Thank you so much, John. Have a great one, and
Take care,
thank
guys.
you, audience, as well. Take care.